Something big is brewing, and ADA could be next in line to shock the market. We have already seen Bitcoin and Ethereum grab the ETF spotlight, bringing in billions in institutional capital into crypto. But now, all eyes are on ADA, with signs now pointing to a Cardano ETF approval that could drop in the next few months. This isn't just speculation anymore. There is real momentum building, and the timing couldn't be better. Welcome back to another episode of JRNY TV. My name's Nick, and this is where we break down the biggest stories in crypto that are shaping the markets, and we show you what's coming next so you can stay ahead of that herd. Today we are diving into the Cardano ETF narrative and why ADA is one of the few cryptos that's recognized in the recent US legislation, as well as how this could open up the floodgates for institutional capital. We're going to talk about how this ETF, it could push ADA toward the $10 mark, what other bullish catalysts are on the horizon, like the Midnight airdrop, and why 2025 may finally be Cardano's time to shine. All right, so let's set the stage with how Cardano became one of the very few cryptos that's singled out as a mature asset in Trump's recent crypto act, and why that matters for an ETF approval, why mature blockchain status for Cardano matters, and what it really means. Let's pause and break this down. The Clarity Act isn't just crypto regulation. It is a shift in how lawmakers define legitimacy. A mature blockchain system, as defined in the bill, is one with no single person or entity or group in control, a diverse validator set, open governance, transparency, and broad token distribution. If a chain checks those boxes, it can be classified as a commodity, regulated by the CFTC, not a security under SEC rules. That is exactly why Cardano is being named alongside Bitcoin and Ethereum, and it's such a big deal. Why Solana BNB chain and others struggle hard with centralization concerns, ADA's Ouroboros proof-of-stake design, it remains a standout. Over 20% of ADA supply is not controlled by any single entity, and that's a big deal. Its validator participation is geographically and technically diversified, and governance is fully on-chain via the Voltaire phase. What does that mean in practice? Well, if Cardano achieves formal certification under the Clarity Act, projects built on ADA can become the go-to choice for US institutions, funds, custodians, payment rails, DeFi platforms, you name it, all under a much lighter regulatory lens. And that kind of clarity reduces the friction, speeds up product development, and it extends legal protections for builders and token holders alike. In short, ADA is being labeled mature because it gives an edge that few other chains have. It means potential spot ETFs, enterprise integrations, and legal certainty, all because ADA's architecture aligns strongly with what US regulators are now formally endorsing. Institutional confidence is about to get a turbo boost. Why a Cardano ETF could be just months away, and what signals to watch out for. All right, let's talk timelines, because this dream isn't too far off. A Cardano ETF may drop sooner than most people think, and the signs, they're stacking up and fast. After the success of Bitcoin and Ethereum spot ETFs, the SEC now has a working framework for evaluating crypto-based investment products. Woo. And with Cardano already labeled as a mature blockchain under the Clarity Act, the legal groundwork is already in place. According to Polymarket, a decentralized prediction platform known for nailing ETF timelines, the odds of a Cardano spot ETF launching by early 2025 are hovering between 74 to 84%. That is incredibly bullish and far more confident than we saw in the months leading up to Ethereum's own ETF approval. Behind the scenes, financial institutions are already moving in. The reports have surfaced that at least 2 major asset managers are currently exploring Cardano-based fund products, and there is speculation of a grayscale Cardano Trust ETF filing being prepared. On top of all that, whispers from DC suggest that Charles Hoskinson, Cardano's founder, has been involved in private blockchain advisory discussions with policymakers. So when the guy who built the chains is in the room shaping the legislation, you know something big is coming. So why does this matter? Because ETF approval is a liquidity unlock. It gives the retirement accounts, the brokerages, the pension funds, and everyday investors a compliant, trusted gateway into ADA. No wallets, no exchanges, and no keys required. And if we've learned anything from the Bitcoin and the ETH ETFs, it's that once institutions have a button to press, they press hard. We're not just watching rumors anymore. Right now, we're watching the checklist get ticked off one by one. The moment that approval hits, it is game on. Why ADA and an ETF would be incredibly bullish for Cardano, and why it could push ADA toward the $10 mark. Let's not sugarcoat this. A Cardano ETF would be absolutely massive for ADA's price. We've already seen what spot ETFs did for Bitcoin as well as Ethereum. Billions in institutional inflows, surging demand, and we can't forget the new price floors that just didn't exist before it. If Cardano follows the same path, we're looking at a potential explosion. And yes, $10 ADA is back on the table. Right now, ADA is currently trading around the 70 cent to 90 cent range, still recovering from the broader altcoin slump. But the setup is eerily similar to Ethereum before its ETF run-up. Long consolidation, strong fundamentals, undervalued ecosystem, and institutional positioning under the surface. Several analysts, including those at firms like VanEck and Matrixport, have already issued 2025 targets between $3 to $10, depending on ETF approval and macro sentiment. So why such a big jump? It all comes down to liquidity and access. An ADA ETF would allow brokerages, hedge funds, RIAs, and even 401ks to buy ADA directly without needing to touch crypto-native platforms. That is a big deal. It unlocks a massive pool of capital that currently can't or won't buy ADA because of legal or custodial limitations. Once that dam breaks, price discovery enters a whole new realm. Buckle up. And here's where it gets even more interesting. ADA isn't just riding regulatory tailwinds, it's also gearing up for internal catalysts like the Midnight sidechain, governance upgrades, and a new wave of dApp launches. You add that to the ETF narrative, and you've got yourself a cocktail of scarcity, demand, and speculation that could send ADA flying. So is $10 crazy? Not if the pieces keep falling into place like they are right now. More bullish catalysts for Cardano, Midnight governance, and beyond. Now, even if the ETF doesn't hit right away, ADA still has some serious firepower under the hood. The biggest near-term catalyst is Midnight. If you haven't heard of it, it's Cardano's upcoming data protection sidechain, and it's a big deal. It's not just another extension, it is a game changer. Midnight's goal is to bring privacy and compliance together, allowing developers to build dApps that are confidential but still follow the rules. That's massive for institutions, governments, and even enterprise players who want to use blockchain, but they can't touch chains without compliance guardrails. Midnight is already in DevNet, and a public testnet is on the horizon. Once it goes live, it's going to open up the doors to private DeFi, confidential smart contracts, and regulatory-friendly tokenization, things other chains still currently struggle with. And guess what? The Midnight airdrop is on everyone's radar. Unless you're living under a rock. It's already bringing fresh liquidity into the ADA ecosystem and creating new demand from users and devs alike. But it does not stop there. ADA is also entering its Voltaire phase, which means full on-chain governance is finally becoming reality. Think decentralized treasury, community-led funding, and proposals that actually get executed on-chain. No other major L1 is this far along in merging decentralization with long-term scalability. And that's why it's gaining respect not just from retail, but from the developers, from the researchers, and the policy circles as well. When you combine all of this, the ETF buzz, regulatory clarity, Midnight governance, and a still very undervalued price, ADA or Cardano isn't just surviving the bear market, it's loading the chamber. Why Cardano could be the sleeper play of the next bull run. So where does this leave us? With all the noise around Bitcoin, Ethereum, and Sol, it's easy to overlook Cardano, but that might be a massive mistake. This thing has been slowly, methodically setting itself up for a breakout, and the signs are everywhere. Regulatory clarity? Check. ETF momentum? Definitely check. A sidechain like Midnight on the way and full-blown on-chain governance about to drop? Check. That's a trifecta that most blockchains can't even dream of. And while the market sleeps on ADA, that's where the opportunity hides. The ETF could flip that switch. The Midnight airdrop could reignite developer activity. And if that $10 price target starts feeling more tangible, FOMO will do the rest. We've seen this movie before. And from time and time again, first they ignore it, then they laugh, and then they buy the top. So ask yourself, are you going to be early this time? Or are you going to wait for the headlines? Thanks for watching JRNY TV. If you are bullish on ADA or you think the ETFs are coming sooner than people think, be sure to hit that like button, drop your ADA price prediction in the comments below, and make sure that you are subscribed. We've got a wild ride ahead, and Cardano might just be in the driver's seat.